All right. So that was a good look at 2023. So it's time for section two, where we share some economic forecasts for 2024. And remember, these are not real estate forecasts, but most of the real estate forecasting that's in section three is based on these critical economic forecasts. Our first prediction today is about the economy. And I have to start by saying we were wrong last year. Last year, when we did this, we thought a recession was inevitable. But today, based on very strong evidence, we are forced to change our mind. We think that the US economy is going to have a soft landing this year, even though the second half of this year is going to feel like a recession. So this is Marcus and Millichap's prediction of what they think is going to happen to GDP in 2024. So you can see 1.2% is what they're looking for. And we've studied a lot of predictions. We don't have time to show you all of them, but they're all pretty close to this much. This one, basically, they're saying, yeah, the economy might grow at, 1.2%, 1.5%. But every single one of these forecasts at this point is saying the soft landing is likely to occur. So our first prediction, the US achieves a soft landing. And you can see a lot of economists are saying things similar to what Freddie Mac is saying here. So this is representative. As you can see, Sarah Hoffman says that the economy is on track for a soft landing, but will be bumpy throughout the year. It was bumpy today. The Dow went down 500 points. Our prediction on multifamily is about additional strain that is coming from all the new incoming supply of Class A apartments and high interest rates. But she does expect multifamily to retain its numero uno status as a favorable asset class. All right, moving on to number two. Our second prediction is about the labor market. The Fed is doing its job, and every month we are seeing job openings go down from their peak. And at their peak, they were at 12 million. You see this peak right here, right? 12 million, and we're about 9 million today. And as you can see from the chart on the right, as these job openings drop, so does wage growth. So wage growth here was about 5.1%. Now we're down to about 3.2%. So healthy, above inflation, always good. But we expect and we predict that wage growth will continue to cool and eventually end up in the 2s or 1% range, right? And one of the things that cools inflation is wage growth. When wage growth is low or negative, inflation is low or negative. Now, our third prediction is about the unemployment rate in the US. And once again, we have to eat humble crow on this one because our prediction a year ago, we had a chart like this a year ago, was that the unemployment rate would be about 4.5% by the end of 2023. And as you can see from the red section on the red, everyone was right on the fact that unemployment would go up, but it went up really, really slowly. I mean, just basically 0.2% throughout the year, right? Analysts do expect that trend to continue and accelerate just a tad bit throughout 2024 and expect unemployment to end 2024 at about 4.3%. So we're at 3.7 now. They expect it to go up a little more than half a point. Now, keep in mind, this, which is the peak, is still extremely low levels of unemployment, right? I do expect after that in 2025 for unemployment to trend downwards, potentially ending 2025 at under 4%. Right? So that's the prediction for unemployment. Let's move on to prediction number 4, which is about the growth of the economy, commonly referred to as GDP. Now, as you can see from this section on the red, growth did impossible things in 2023 because it pretty much accelerated throughout the year as the Fed was pounding it with this massive interest rate hammer. Now, of course, a lot of those more recent interest rate hikes are starting to take effect. So they're starting to take effect in Q1 and Q2. So the analysts do expect the economy to slow down quite a bit in 2024, with the second half, which is right here, feeling like a recession. Remember, if it goes any lower than 0 for 2 quarters, that's a US recession. We don't think that's going to happen. It's going to feel like a recession and then really, to start to accelerate in 2025 and accelerate throughout the year in 2025. 2024 is also an election year, and it's normal for the economy to accelerate immediately following an election. All right, number 5, our fifth and final prediction in this economy section is about interest rates. As you can see from the screen, analysts, they're ridiculously over the map, right? So there's You can either look on the left where Wells Fargo is like the Fed's going to go crazy and cut 200 basis points. That's ridiculous. And then on the right side, Barclays like, no, they might only do 50 to 75 basis points. That also, I think, is a little bit too gloom and doom. I think the average on this page is about 130 basis points, which is 1.3%. We think that the market's overshooting. We don't think that the Fed feels like they need to raise rates that quickly. So our feeling is that we're going to see 100 basis point raise this year, starting in May. There's no meeting in April, and March doesn't look likely. The Fed seems to have time, especially with today's inflation numbers. So we think that they're going to cut a quarter point in May and then basically cut at several other meetings throughout the year, ending up with 100 basis point or 1% lower in mortgage rates.